Now, the inflation figures were out this morning. They were worse than forecast. We're at a 40-year high. It's projected to go higher still, and there's perhaps quite a big change in interest rates coming. I say big change. If you're on a variable mortgage, Liam Halligan, economics editor here at GBNews, it could be a big change. Start with inflation. Worse than expected.
Well, worse than expected by some analysts, Nigel. Some. So inflation was 9.4% during the year to June. And it was 10.1% during the year to July. A 40-year high, as you said. The last time inflation was double digits, a singer called Madonna was just making her debut. Michael Jackson was bringing out Thriller, the best-selling album of all time. In other words, when I was a lad. So this is a serious cost of living crisis. To me, it's also, though, Nigel, a cost of lockdown crisis. Why have we got this high inflation? A lot of the Bank of England officials, the Treasury boffins who are meant to be keeping their eye on inflation, they blame the war in Ukraine.
Oh, yes.
But even before the war in Ukraine, back in January and February, inflation was already at a 30-year high in this country, despite the Bank of England saying for months and months it wasn't serious, it was going to be transitory.
If you print lots and lots and lots and lots of money, in the end it has an effect.
It's a cost of lockdown crisis because during lockdown the Bank of England expanded its balance sheet, printed more money in a single year than it did in the previous 10 years. And a lot of that money's got into the system. Also, because if you shutter the world economy for 2 years, all those factories close down, all those systems unravel. When demand surges back post-lockdown, as it did, the world economy struggles to supply the goods and services that people are demanding. And that, for me, is the main reason why we have such high inflation.
I think that cost of lockdown point is very strong, very powerful. We learned yesterday that wages in real terms falling quite sharply.
Indeed, wages in real terms are going down they went down by 3%. That's the fastest fall in real wages on record because wages are going up because the labour market's tight, because there's a shortage of workers in some sectors, but inflation's going up even more. And that 3% official fall in real wages will be bigger still if we use the new inflation number. They must have known today's inflation number when they came out with yesterday's wages number.
Yeah. And, being an old city boy, a markets guy, I couldn't help looking this morning at the projections.
Yeah.
The markets are telling us that interest rates will rise by a further 2% by next May.
So we've had 6 successive interest rate rises by the Bank of England when they finally admitted that inflation was a problem, having denied it for a long time. We've gone all the way from 1/4 percentage point all the way up to 1.75%. I say all the way. It's a big sort of proportionate increase, but it's still really, really low by historic standards. But you're completely right, of course. The weight of money in the markets, what traders are telling us, the prices that are showing on what we call the yield curves indicate to the best, these are the real projections where people are putting their money, not what some academic in Whitehall says.
Or somebody in the Bank of England saying inflation's not happening,
That's
or
right.
it might be transitory.
That's right. What the weight of money in the markets is showing, people betting, live ammo, real cash in millions and millions of pounds, is that we're looking at interest rates going up from 1.75% where they are now, doubling to 3.5% by the middle of 2023. Now, most people have got a mortgage these days. They fixed it. Only about 1/4 of mortgage holders, around 2 million households, are on variable rate mortgages. But the trouble with a lot of fixes is that they run out, right? And when you try and renew that fix, then that's when you get a real shock, because you have to fix at a much higher rate, a higher monthly outgoing.